Small caps have had a tough time since 2014, so why small caps and why now?
Yeah, and I think small cap is just an asset class that has proven itself over time to outperform large caps, again, over long periods of time. And I think for active management has proven to be able to add alpha relative to the benchmark over time in the small cap asset class because of the inefficiencies that are there. So making market timing calls is pretty difficult, so we try not to do that. We just try to stay fully invested and really just look for companies that can add alpha relative to the benchmark over time.
Yeah, time horizon is such an important lens through which to look. The S&Ps at a 17 times PE multiple, as you said, it seems like valuations are getting a little bit frothy there, whereas small caps at a 13 times PE, that looks a little bit more attractive, especially for a value investor.
Yeah, and the way we say it at Aristotle is that we're not buying the index, so we don't really care what the index is valued at. We're buying individual companies that we think are attractively valued. And I think there are lots of opportunities out there across a variety of industries, and that's just our job, is to go out and do that on a daily basis.
Yeah, and I want to dig in a little bit deeper with active management, particularly with small caps. I mean, everybody knows across the board the beta trade was so productive the past 5 to 7 years with the inflation of asset prices and QE. We're certainly at a different point in time right now. But why specifically active management for small caps?
Well, I think it's because of the inefficiency of the segment. There's much less scrutiny from Wall Street in terms of the research coverage. The trading liquidity can create buying opportunities, and I think it's just a class that is really overlooked by a lot of investors, and that just creates more opportunity when there's less scrutiny out there. Right, and passive management is really an inefficient allocator of capital because the money flows in, buys anything. It doesn't matter how expensive or cheap it is, or how good a business or how bad a business it is. And so it's our job to identify and really weed out the good companies, not really look at the bad companies, and allocate capital more efficiently.
What about time horizon for you?
We're similar. Actually, our average holding period is over 6.5 years. We actually have a quarter of our portfolio that we've owned for more than 10 years. So we truly do take a long-term approach. We'd never kid you that we have a crystal ball looking out 10 years when we buy something. But we think if we're identifying the right businesses and the right opportunities, you can wind up holding things for a long time. And it avoids really trying to react to that market volatility, trying to make market timing calls. It really comes down to identifying the good businesses. And when the market gives you the opportunity, you take advantage of it. Yeah, I mean, the M&A activity in our space has been pretty good in the past year or so. Over the last 18 months, we've had 18 of our holdings acquired by other companies. And it's like I said, you're losing some companies that you have a lot of faith in, but you'll take it. It's a good problem to have, and then you try to find the next one.
Well, let's dig in a little bit with volatility. I mean, typically when we see more volatility, more chop in the market, there's more dispersion. It sounds like there's more opportunities, actually, for you guys.
Right, and it can be frustrating when it happens to a name that you continue to own, but if you really understand the business, you really understand the opportunity, it maybe becomes an opportunity to add to the position and not really get scared out of it. And I think that's the benefit of being a long-term investor, is that you really don't have to try to make those market timing calls. And it's also an opportunity to initiate new positions, maybe in something that you like, but it was too expensive when you were first looking at it. So again, market volatility can be frustrating at times when it happens, but it definitely creates opportunities if you're a long-term investor.
Jack, how does the election cycle play into when you're looking at small caps from a top-down perspective?
Well, we really do things from a bottom-up approach when we're picking our stocks, but you have to have a top-down opinion about what's going on. And I think the problem right now is the election cycle is creating a lot of uncertainty, and investors generally don't like uncertainty. So I think that contributes to a little bit of the volatility that we've been talking about here today. And I think the other issue that investors are grappling with is, depending on who wins this election, there could be some really different approaches on how to deal with business and how to deal with the economic situation. And so that, again, that just creates uncertainty that investors really don't know how to deal with, and creates that volatility. But as we've been saying, it can be frustrating from time to time, but it also can create opportunity. So I'm not sure how the election is going to turn out, but I think the economy will be fine in the long run.
What are the biggest issues? I mean, you hear so much about tax inversions. You hear about sort of populist desire to be insulated and limit trade outside the U.S., but you think of those as kind of large cap issues. How's that impacting small caps?
It really impacts the management of the companies, their ability to make investment in their businesses when there's a lot of uncertainty as well. And so I think the large caps get a lot of the attention, but it impacts small cap companies as well, just in their ability to manage their businesses on a day-to-day basis.
And the strong dollar we had that's been a headwind for a lot of multinationals. A lot of small caps seem like they'd be insulated from that.
We do have exposure to markets outside the U.S., but to a much lesser degree than a lot of large cap multinational companies. And so while there's individual companies that are dealing with the strong dollar right now, I think from an asset class perspective, it's one of the reasons why we think that the small cap sector is really attractive, because the growth dynamics can be better than they can be for some of those large cap companies. And I think the validation of that is the amount of M&A activity and large cap companies buying smaller cap companies to supplant their growth that they haven't been able to do on an organic basis, partly because of a strong dollar.
Yeah, is that where we're seeing the majority of M&A activity actually being generated from?
I'm not sure I'd say the majority of it, but I'd say it's pretty healthy, again, at least of what we've seen in our portfolio. So I think it is just again, a validation that a lot of large cap companies are having a hard time growing.
Mm-hmm. Any other big macro trends that you feel are impacting the small cap space, be it interest rates, currencies, central bank policy?
Well, I'm sorry. I personally think that again, a lot of the volatility in small cap, a lot of the lag that's been taking place relative to large caps over the last 2 years, if you will, is driven by that uncertainty about interest rates and what will you discount future earnings at. And investors, again, don't like uncertainty. So when they're looking to de-risk or to become, or they are becoming more risk averse, they pull back on their small cap weighting. And I think that again can be frustrating when it's happening, but for a long-term investor, it's really creating a long-term opportunity. When money flows into passive products, it indiscriminately buys. And in a rising interest rate environment, it's incumbent upon us to identify companies that have good balance sheets. If the cost of capital is going up, that it's not going to be overly damaging to their profitability. And so, Jay's right. This is going to come to an end at some point, the low interest rate environment. And so you better have companies that can withstand a rising interest rate.
Let's dig into other sectors. I mean, we've kind of touched on healthcare. And what other sectors do you like?
I mean, we're looking around and we're really finding opportunities across the board. We're sector agnostic as well, but and we're not biased. We'll go just about anywhere in terms of sectors. We're going to avoid binary outcome situations in our strategy, but there's really opportunity everywhere if you're looking. And as a long-term investor, you don't need to find 100 new ideas a year. You only need to find a couple, a handful. And so it just comes down to being focused and disciplined and being focusing on the business as opposed to what sector you're looking at. And if the market gives you the opportunity in an area and you find a lot of ideas, we're not afraid to go overweight. If we cannot find ideas in a particular sector because they're not attractive, we're not afraid to avoid that area. It really is about buying good businesses, investing in good businesses.
How concentrated are you guys?
We run roughly about 100 names in the portfolio, and position sizes can be anywhere from on the top end 2.5% to something that maybe we're starting out new with is 25 basis points working its way up. But it's really trying to be, I call it concentrated enough that it allows your successful ideas to add value, but it's also diversified enough to protect you in the event that something goes wrong.
Yeah, we talked about valuations a little bit and where to find good value, Jack. What about, energy?
Well, obviously, given the carnage that's taken place in the sector over the last 2 years, year and a half, there should be a lot of opportunity, but given the precipitous drop in crude oil prices and the devastating effect that's had on the balance sheets over that time period, you better be very, very careful. There will be companies that will survive. There will be companies that will prosper as commodity prices rebound, but it really is about being careful right now and making sure you identify a good business with a good management team and a good balance sheet.
So selective opportunities within energy.
Selective, absolutely. Crude prices should come back at some point. It's a commodity product. It's all about supply and demand, and supply is being impacted as a result of this. It may take some time to filter through, but trying to make that call, trying to pick the exact bottom in the commodity price, trying to pick when it's going to go up and really save some of these companies, it's not our job. Our job is to identify the businesses first and then factor in what the commodity price is right now and where it might be going. Yeah, I think that's right. There's a lot of guilt by association companies right now where they're being tagged with the energy brush, and it's really not as big of an impact as the share prices might suggest. So it goes back to what we've been saying from the beginning, is it's opportunity. It may be frustrating if you own some of these things, but it's definitely an opportunity to either add or to initiate new positions.
And just to widen the aperture a little bit, when it comes to small cap investing, where just broadly is everybody, kind of seeing that growth versus value play right now?
Well, I think history would suggest that value-oriented stocks outperform growth-oriented stocks over long periods of time. But the last 5, 6, 7 years, whatever it's been, growth has been really leading the charge since the market bottom in 2009. And so you would think over time, reversion to the mean would kick in. And as we were talking earlier, some of these banks that have been underperforming can start to outperform. Financials is a big part of the value index. But there's no reason why a lot of these money-losing companies can continue to go up. You can't go up forever if you're losing money. You have to start making money at some point. So I think from a looking for good opportunities, I think we all discussed here, looking for good values, good businesses, good opportunities, I think that bodes well for our kind of businesses going forward, where it's not just rampant buying of growth stocks.
Feels like there's a little more financial gravity these days.
Yeah, I mean, I think we're always looking for good businesses at attractive prices, and so good businesses should be able to grow. So the definition of growth is going to change depending on who you're talking to, but I think we're all looking for companies that can grow their shareholder value, but we're going to be very disciplined about what we pay for that.
And then, we've really talked about the bottom-up stock picking process. What about, for people who are thinking about allocating into small cap funds, what about the top-down process, be it from a portfolio management perspective, a risk management perspective? I'd love to hear everybody's thoughts on how they manage that.
Yeah, I mean, at Aristotle, we're doing things from a bottom-up approach as well, but you have to factor in the top-down issues into your company-specific analysis. You're not trying to make a bold forecast on crude prices or interest rates and then build a portfolio around that, but you're going to put some scenarios into your company-specific analysis based off various levels of interest rates in crude oil and the US dollar or whatever it might be into that company-specific analysis, and then build your portfolio that way. Yeah, I mean, I think the evidence is indisputable that small caps generate outsized returns over long periods of time, but the key is long periods of time. Trying to make those short-term market calls is very dangerous, and that's where you add your risk. If you're trying to get in and get out and you mistime that, you can really hurt yourself. So stay focused on the long term, keep exposed to the small cap segment of the market, and identify good active managers that can add alpha above and beyond that.
You really honed in on company management. Walk us through that a little bit more.
Yeah, I mean, management is important in any business, but in small caps in particular, because they tend to be more narrowly focused than a lot of their large cap counterparts. So having a management team that is really focused on creating value for shareholders as opposed to building something just to get bigger for the sake of getting bigger. And so they're the ones that are going to set the strategy. They're going to be the ones that hire the people to execute the strategy. And ultimately, they're the ones that are going to dictate the kind of returns that we can get as investors. You really want to have a good business to begin with, and sometimes management change is bad, but sometimes it can be good because you might have a good business with a management team that hasn't been able to execute, and so a management change can be a catalyst to unlock that value that's in the business, that's in the good business.
Mm-hmm. Before I let you guys go, I'd love to get your thoughts on the outlook for small caps, where you see them through the end of 2016 and beyond.
Yeah, I mean, I think it's just really difficult right now to say. I think the fundamental situation is okay, and so there's opportunity for companies to go higher, but there's so many external factors about the election, about interest rates, all the stuff we've been talking about. So you can envision a scenario where the market's down a little bit, you can envision a scenario where the market's up a little bit, and it's really difficult to tell, which is why we try not to make that forecast. But I think we believe that if you look out 2 to 3 to 4 years, that you're going to make an outsized return relative to large caps, and that's really the focus.
And then I want to go back to something you said about dividends. I mean, are you actively looking for dividend payers at this point?
Yeah, I mean, it's all about the capital allocation decision, and if there's not a good place to invest in the business, then I'd rather see them pay it out in a dividend. We're not necessarily looking for that, but it really comes down to understanding what management's focus is, and if there's not a good opportunity, then pay it back to the shareholders.
Well, this has been fascinating, but before I let everyone go, I'd love to get everyone's final takeaways on small caps right now.
And I think, as we've said, there's really a great long-term opportunity in small caps, and I think there's a really great opportunity to be an active manager in small caps.
All right, gentlemen, thank you.
Thank you.
Thank you, Courtney.
And we want to continue this conversation about small cap investing. Follow us on our social media on LinkedIn, Twitter, and Instagram. From our studios in New York, I'm Courtney Woodworth.